Hey guys, Doug the Retirement Guy here. We got something different for you. It's called the Vanguard FTSE Development Markets ETF, or better known as VEA. Is this good for a retirement account? Is this good for this time of year? With the everything going on, the stock market bouncing up, down, sideways, this is something that's going to be interesting for you. Now, I know the dividend only shows a 3.41%, which is normally down from stuff that we show you. But let's get into it and tell you why we think this is very strong for your retirement account. So the VEA basically is an ETF fund that spreads itself across large, mid, and small cap companies located in what called foreign countries outside the US, Canada, major markets of Europe, and the Pacific region. So this is an alternative to always buying in the US market. If you wanted to get some international exposure into your ETF, into your fund, into your retirement account, I think this is probably one of the best funds to really look at. And I believe it's one that you buy and set it and forget it for 2025. Very unique. 3.41 distribution rate. There is no 30-day SEC yield, and we'll get to you why. And expense fee is so low at 0.03%. So it's a very cost-effective fund. So when you look at the characteristics of this fund and what countries they're dealing with, you'll see Japan, 21% of the fund is in Japan, 13% in the United Kingdom, 10% in Canada, 8% in France. So fairly in the first 7, 8 countries, it's well balanced. Switzerland, Germany, Australia, and then after that, it slowly starts fading off a little bit. But what we like about this and why we think this fund will continue to grow and develop in 2025 is when you look down, is right here at the PE ratio. This PE ratio is at 15.9. And when we did a comparison with the US based companies, the comparison comes into is US is like 26 times earnings ratio, while these are at 15%. We'll give it up 16% bump in earning ratio to the 26% the US market has. So you're buying things at a cheaper, lesser discount in the foreign characteristics of a lot of the stocks that we have here in the US. So the potential, if this thing just takes a little bit of increase in the earnings, which we expect, you're going to see a big return coming back from this fund. When we take a look, and this was very difficult, when you take a look at the total stocks of 3,910 total stocks, we used their listing of the pretty much what they call their top 10. And we went down this, and you got SAP, we got Nestle, we got Toyota, we got Shell. We have a lot of foreign, what I call is the foreign version of the US version. Okay, SAP has a US market, and then they have the foreign market, and that's what you're buying is in the foreign market package. So a lot of this is going to show us and give us what happens in foreign markets. And again, a lot of this is all driven off the US dollar. So why VEA? Simple word, diversify. VEA advertises a 3.41 dividend. Now that is nothing to write home about. This is nothing spectacular. We're going to say, hey, put your money into it and you're all set for life. Especially when you turn around a 0% 30-day SEC yield. This thing's all about the return on the investment that they've made. If we wanted something, I would tell you take this money and put it into a high yield savings account, and you'll be able to make more money from dividends. But even though the 3.41 is a nice dividend to work from, our whole thing, and I hate to say this, it's also paid quarterly, but it's this diversifying into foreign markets. So when you have your portfolio put together, adding in foreign is excellent because it gives you coverage for foreign markets all in one fund. So if the stock prices in the US are going down or the dollar weakens, foreign markets normally have a tendency to increase and grow. So when the US market is running in some crazy times, very similar to what it is now, that you have additional things in your portfolio that will grow. And we believe that VEA is one of these stocks that we see going into 2025 as being a big producer as the US continues to make its changes and adjustments across the board. Because here's one of the things that we look at, take a look at the return of VEA over time. Now, again, this fund started back in 2007. So we got 17, 18 years invested into this already. This is at the end of March. Now, we know the stock market had a huge drop off in March alone. At the end of March, this fund was only down 0.01%. So it's a tenth of 1%. When the rest of the market's down 6 to 15%. When you look at the 3-month total, it's up 6.79. When you look at 1 year, they're up 4.56, 3 years 5.7, 5 years 12.13, 10 years 5.60. So it has a true track record that it's going to generate in the positives, in good times and in bad times. And as we look at the first quarter of this year, we've had some bad times in the US, and this fund continuously is producing some bigger numbers. This is what got us excited and said, hey, let's look deeper into this. So I decided to take this look a little deeper again, and we put it into our calculator that we invested $10,000 into it over the past 12 months. So putting 10,000 in, it started off at $49.96. We would have been able to buy the 200 shares. When you go out 12 full months on 3/7, the value was 52.58, which we made 5.24%. Dividends, again, 3.12 or $312. And this goes through $836 or 8.36% return off of 12 months basis. Now I added something else in here. I added what the report was coming in at April 8th. Now we've had a big drop off. This did hit with the tariffs that kicked in and so on. They did affect the numbers a little bit, put us down to negative 8.63%. But what I'm trying to show here is in a standard operating year with everything that's gone on for 12 months, we were up over 5%. It will recover out of these tariff situations, but I also want to show, look what the drop off was compared to what other stocks have done. So this 8% is not as big of a number as I really believe it to be. Looking at the price chart over the time, you can see that YEA through March was actually doing fairly well. Average price of $50.34. But once we hit that March ending point, we were down 9.3%. And then when we add in the April drop off, you can see where we're sitting. So really the stock right now is averaging about 8% below current cost. And that really puts us at saying this could easily be a buy point right now because we expect it to get back to that $50 price point. So we're looking at about a 10% gain from the points that we are right now. So overall, in summary, in the first 12 months at 5.24, big positive. The dividend 3.12, we're going to give it a positive, but again, we're not buying this because of dividend. We're buying this because of a combination between the two to get the growth for an 8.35, including dividends. Now, I always throw this in there because we're trying to be as straightforward and honest. The stock return over 13 months is negative 8.63. That is something, and if we take a look at the very next day, 2 days down the road, you're going to see the number totally change again. Because if anything happens with the tariffs, if tariffs are put on hold, if tariffs are increased, you're going to see different numbers prop through. But I think, again, over the long haul of 2025, you're going to be back to the green numbers of 5 to 6% growth. And I think right now it's just making it for it's a buying point, and we could possibly see a potential at 10% growth. Even with the dividends, you're down 5.51%. So is VA good for a retirement account? And the answer is yes, because for diversification. Diversify from just all US stocks to a combination of US and foreign stocks across the board. It pays a decent dividend at 3.12, but the foreign markets gives you a wider range that if the US is down, other markets will be up and across the board. I put this as a moderate buy, and I believe this is really where you want it to be. Guys, this is Doug, the Retirement Guy. If you like what you're seeing, give us a thumbs up. If you haven't already, hit that subscribe button. Don't miss one of our videos that we put out. And best of all, if you have any comments, don't be afraid to put it at the bottom. Everything helps the channel grow, and we appreciate it, and we'll see you next time.